Hey, Ken, this is Ryan with TrendLizard.com. Thanks for signing up at TrendLizard. Glad you're part of the community. And thanks for the email. We're going to get this started, your custom analysis, by taking a look at the stock that you sent me, which is Discovery, DISCA. And it took a lot of effort to kind of look at this thing from so many different angles. It wasn't super straightforward, especially with the spike it had in late 2020, early 2021, and then the preceding tank job that it did from there. So it took a lot of effort, but this is what I have come up with. So let's get started from the beginning. This guy, Discovery, was incepted back in 2005, had some sideways up and down action, ultimately put in a low in late 2008. That's when things became more directional for Discovery. It gave us a nice 5-wave advance to the upside. From there, it pulled back and gave us an ABC pullback that completed in 2020. And from there, kicked off a very sharp up move where it basically quadrupled in price, but then just as quickly gave most of that back. So the tricky part about this, if this up leg here was part of some larger incomplete pattern, we would have expected this pullback that happened in 2021 to not move lower than 40. Basically, this yellow area is a Fibonacci retracement area of this up leg, and the bottom of that area would be a 61.8% retracement of this up leg. So it blew through that, which has to make us think that this pullback that's happened off the high is more obviously than just a correction of this up leg. Has to be correcting an even larger pattern. Now, just because Discovery was incepted back in 2005 does not mean that this is the starting point of some 5-wave advance. It could drop us right in the middle of a larger pattern that we just cannot see. For example, could be something like this ended a second wave, this was a third, this was a fourth, and this is a fifth. And now we have a larger correction of a move that we can't fully see to the upside. There's really no other way for us to describe this because this pullback has been so sharp and so big and has retraced way more than 61.8% of this up leg here. So the problem with that is it makes it difficult to really quantify where this low might occur because we don't really have any retracement area or any other obvious support that we can look at to say that's where it should end based on a larger pattern. We can't say that because we don't see the larger pattern. The point being, this is a larger correction and we need to better understand it. For now, let's go ahead and zoom in on this up leg off the 2020 low. Now that up leg is a very beautiful move. It's very clearly a trendy move, 1, 2, 3, 4, 5. But as previously discussed, it was basically fully retraced by the sharp decline that followed it in 2021. And if we look closer at this sharp decline, it also has a trendy look, as you can see here. It looks like a 5-wave move to the downside. This looks like a warning sign. If this was all of the correction, we would not expect it to be a 5-wave move. Now, I can't say with absolute certainty that it is a 5-wave move. I'm just saying the potential is there, as you can see from this labeling. Whenever you get a 5-wave move like this, the expectation would have to be it's not the only part of the correction. Like this would have to be wave A of a larger ABC type of move. You never just get one 5-wave move as a correction. That's not how it works. 5-wave moves are trendy moves. So if this really is a trendy move, it tells us that overall a larger down move is going to occur. So let's go ahead and take an even closer look here at that 5-wave decline. Again, it's not blatantly obvious that it's a 5-wave move. It's just a possibility. So the way I see it, with what the recovery that we're seeing off of December's low that's happening to the upside, really the best thing that I can really have any confidence in is the possibility that this is a larger correction that is going to correct this entire down leg that traced out here. And a correction of this down leg points up to this yellow area. So the potential is there for a much larger recovery. So I guess the bottom line is it's hard to be bullish on any larger time frame for Discovery, but I can see a path to being bullish on the near-term time frame with the hope that a larger recovery is tracing out here. And it looks like the start of a larger recovery. So far, it doesn't look big enough to be a complete correction of this big down leg. So there is some hope that it would want to head higher off of December's low. May not be the straightest path. Generally, counter trend recoveries are not super direct. So you have to keep that in mind, but there is the potential that it will continue higher from here. Let's go ahead and zoom in using our last chart here to look at this price action off of December's low. So there is some hope here. When we look at that recovery, we see what looks like a trendy 5-wave up leg, and then a counter trend pullback that did retrace a little bit more than 61.8% of this up leg. Still kosher, still no big deal. It found support and ultimately turned higher. Things have been a little bit uglier off of January's low. It's hard to look at this and say, it's obviously a trendy move, but the potential is there. And the important thing is this down leg in January does look like a counter trend move. So I think those are all bullish things. Now, if Discovery is going to head higher from here, it should stay above 2650 at all times. If it moves below that level, I think this proposition would become a little less desirable, because I think that would be a more clear indication that it's not going to be a very direct move and that it will be a less predictable move. But if it can stay above 2650, the potential again will be there for a larger recovery, likely a counter trend move to continue on to correct this big down leg. On any larger time frame, as we kind of detailed there, it's hard for me to be bullish just based on the facts before us. One being that this down leg in 2021 has a trendy look to it. Also, this down leg retraced more than it should have to indicate that it is very likely a larger degree move, which we have a tough time quantifying. So I think that's it. I think you can be bullish on the near-term time frame as long as it stays above 2650, and as long as it looks trendy in any way. And so far, it has been able to do that on the near-term time frame, but it needs to stay above 2650 to keep that intact. So, Ken, I hope that is helpful. Let me know if there's anything else you want me to look at for you. Like I said, we do 3 of these each month. That is part of the professional level service at TrendLizard.com, which you are now a member of. For anybody else who's watching this stuff, come visit us. We do this stuff every day. We use Elliott Wave to predict the direction of anything that can be plotted on a price chart, and we're good at it. So come visit. Y'all have a great weekend. Talk to you soon.